very soon. Hello, and thank you all for joining. This is Michelle Savage with XBRL US, and you are here for our webinar, FASB's Meta Model, Invitation to Common and Proposed Policy Election Element Relationships. We're very happy to have with us today Joe Lechka. Joe is a director at KPMG. We have Campbell Fry, President CEO of XBRL US, and David Shaw, who's Senior Project Manager of XBRL at the Financial Accounting Standards Board. Just a couple of logistical points. If you have any kind of technical issues as we go through the presentation today, please send us an email at support, SUPPORT, @xbrl.us. And as we go through the presentation, if you have questions, you can click on the Q&A link on your screen. Just type your question in there and we'll take it during the program. And last, we are offering CPE credit for today's program. So we'll be covering CPE questions at 2 points during the call. If you are getting CPE credit, if you register for it, or frankly, even if you haven't registered, but you're interested in getting it, please be sure to answer those 4 questions, and then we can make sure that we get your CPE credit to you. So with that, I'm going to turn it over to Joe Lechka. Joe?
Thank you, Michelle, and welcome everybody to today's webinar. We're glad to have you here as we talk about the meta model and we talk about some proposed policy election element relationships. So settle down, we're going to have a great session for you today. And I'd like to get this started by kind of level setting a couple of expectations. And I want to make sure that as we go through this agenda, we can kind of talk about a couple of items. We're going to use the word relationships, and relationships, what do we mean by that? Relationships link 2 concepts by an attribute. We're already familiar with a couple of relationships in the basic XBRL. This is the parent-child relationship within the presentation link base. In the calculation link base, we're used to dealing with a summation and item relationship, and we can understand how one or more items may add up to be a total. We're also familiar with dimensional relationships and with the axes and the members that make up the dimensions. As we talk about today, we're going to talk about these relationships, and we're going to talk about why they are used and why they are important in XBRL. Well, relationships can be used in certain ways. They can assist with element selection. So if you know the relationship between 2 items, you can understand which is the right element to choose when tagging your XBRL. Relationships can also help consumers of the data, and it can help preparers. It can also help organizations such as the Data Quality Committee as they write business rules. It can help consumers of the data as they perform analysis and as they normalize the data. If you start to understand how different elements may be related, either say through like something that may appear on the balance sheet and something that may appear on the income statement, you can understand how you can then better understand the relationships, better use the data, and better understand how to test that data is accurate. We're going to move into policy election relationships, and I'm going to turn it over to David. Dave?
Thank you, Joe. Next slide, please. Oh, we're there. Okay. So the purpose of providing these policy election relationships is to create a linkage between these policy election elements and their related monetary or numeric elements. And the reason why we are doing this, providing this, is because we find that currently that policy information is frequently tagged, and that makes it difficult to programmatically collect that information. And while it can be done through other means, such as doing word searches, those aren't nearly as efficient and effective as having tagged structured information. And so we are trying to provide a relationship with a numeric or monetary element and that you would most likely find to have tagged information within the filing with that policy election element to then help in a number of ways, such as help the preparer identify the policy election elements needed for tagging, the users of the data identifying those policy information, for the consumption of the information. And as Joe mentioned, it's also helpful for writing business rules. Next slide, please. So I have two examples on this slide of relationships that we've included within our proposed policy election relationship exposure. The first one is one that I think most of you are familiar with, and that's the element to convey what the depreciation method is being used for property, plant, and equipment, such as straight line or units of production. And it is linked with its the property, plant, equipment net element. So it's the most likely numeric element that you would find on the balance sheet. And I like to use this example for a couple of reasons. One, it's one that a lot of people can conceptually understand relatively quickly, but also it's not actually modeled as a structured element. It is now just a string, which will take basically any type of value, but we are planning to deprecate that element for the 2023 taxonomy and replace it with an extensible enumeration that has a list of an augmentable list of choices to provide structured information. And the other example on the slide is for advertising cost. And the reason why we have this one on there is because it actually is a structured element. It's a fixed list. Has two options, whether or not the advertising expense is as it's incurred, or when the advertising takes place. And so it's creating a linkage between the amount you would most likely find in the income statement or the notes with this policy election element. Next slide, please. Just a few notes on this. Our starting point for what we have in there is really existing elements that are in the US GAAP taxonomy. Not all requirements within the codification have corresponding structured elements. And the plan is to add those where it's applicable and where we can provide structured information. As my example on the previous slide illustrated, not all the elements are optimally modeled. And so over time, we want to replace those with structured elements. And I want to emphasize that this relationship is one that we're planning to include with the 2023 taxonomy so that it can be leveraged. Next slide, please. And in the development process, we have come to learn that we're not the only ones thinking about this. The standard business reporting taxonomy out of the Netherlands actually is doing something a bit similar to what we're doing. It's conceptually the same, but has nuanced differences. For example, theirs is kind of inverted. They call it concept policy. So the monetary numeric element is the parent, the source element, and the policy element is the target. However, all of the target elements, the ones for the policy information, are actually modeled as strings. They're not conveying structured information, whereas that's one of our key objectives. Next slide, please. And here's how they have defined this ARC role. And if you look at the top image, you can see that it is written in Dutch. And from my understanding, that loosely translates to ARC role for indicating a semantic relationship between monetary concepts and the description of their evaluation basis. So it just is similar to what we're trying to achieve. Next slide, Joe. And so the last thing I really want to cover on these policy election element relationships is kind of how to access the information and the next steps really in this process. So if you want to review our release notes, if you want to view it in the taxonomy, you can go to the fasb.xbrl.org website, our page, and on the right-hand side under what's new, in the red box, it indicates where you can click, and that will take you to the release notes, and that provides links to all the information, including, you might as well go ahead to the next slide. That's fine. Including how to access our taxonomy online and review comment system, our TORC system, where you can provide comments. That way you can actually see the relationships. And there is an appendix file that has the relationships laid out in Excel file if you want to view it that way. And next slide, please. And lastly, I just want to point out that the comment period closes this Friday. So if you have any comments for us, you can do it through the TORC system, which was illustrated on the previous slide, or by sending your comments to xbrled@fasb.org. And at this point, we have received very few comments on this. So if you have some, please make sure you get them in by Friday. And I just want to just reiterate that we are planning to include these relationships with the 2023 US GAAP taxonomy. And so now, next slide, Joe and Michelle, I believe we are ready for our CPE questions.
Great, Dave, thanks very much. Yeah, so again, for those of you who are interested in getting CPE, please watch your screen, and I'm going to launch our first poll. Okay, so the question here, which of the following is an example of a relationship? Is it the first one, a concept? Is it parent-child? Or is it abstract? These are all XBRL ideas or words, and which of these best represents a relationship? It will take about another 30 seconds or so. Just another 5 seconds. Right, thank you. I'm going to close down that poll, and we'll go to our second question. When does the public review period for policy election relationships end? Is it November 4th, 2023, December 4th, 2022, or November 4th, 2022? Which is the correct date for the close of the policy election relationships? Just about another 15 seconds here. Okay, I'm going to go ahead and close down that poll, and I'll turn it back to Dave.
All right, thanks. Next slide. And actually, you can probably jump to. Okay, so the next topic we're going to cover is the proposed meta-model relationships, and what these are, or what we're hoping to achieve with this, is wanting to have more expressive relationships provided that give more of the semantic meaning of the elements, being able to assign traits or attributes to those elements in a way that can be programmatically consumed and doesn't necessarily depend on parsing labels or using references, but being able to just programmatically draw out that information that you want on those elements. And the hope is that this has a number of positive benefits. One is assisting in element selection. Another is facilitating the writing of business rules, such as the DQC rules. Another is improving searches for elements to make sure that you're identifying the correct one. And lastly, should help identify inconsistencies within a taxonomy. It should instill a discipline on the taxonomist to make sure that they're thinking about what attributes need to be conveyed by an element, and is that being conveyed, and so you express that. And if you don't have an element that meets those traits, it may indicate an issue in the taxonomy. So these are all really should be seen as positives. Next slide, please. And I want to stress we anticipate that this should have a positive impact for preparers. It should provide a better means for element discovery. To have those properties better articulated, it should help in ensuring that they're picking the correct element. And we also see that longer term, it could be used by preparers to anchor extension elements that is more expressive than the wider, narrower relationship arc that they're using with the ESEF project over in Europe. And also, I do want to stress that current processes shouldn't really be impacted by what we are proposing through this. Next slide, please. Okay, so these are the 8 relationships that are included within our proposed meta model exposure. Campbell and I are going to go through each of these one by one, and I'm going to start out by kind of giving more of the semantics of what the relationship is going to what it conveys, and then Campbell will talk about the benefits of those relationships and go through an example of each. And even though we are going through them individually, they do work in concert of each other in certain ways. Like the first 2 work together, the second 2 work together, and the next 3 work together, and the last one kind of doesn't. But hopefully the examples will help illustrate how the relationships can work together and help the users of this information. And so with that, next slide, please. Okay, so the first relationship group we are covering is the instant accrual relationship. And so this is a relationship between an instant element and a duration element that represents an accrual for a provision of expense or income against the instant element. So this is typically for the balance sheet element that has an accrued expense against it, for example. And it signifies the user interest costs when there's no cash transaction has occurred. And so the source element, which can be thought of as the parent, is an instant element, and the target element is a duration element. Next slide, and I'll turn it over to Campbell to talk about the benefits and go through the example.
All right, thank you, David. So this element, and one of the main driving factors, for this relationship is so that we can identify accrual items. And in the taxonomy, it's not always clear that something is the accrual element. So one of the benefits of this is that it actually helps you to identify which element represents an accrual transaction, or represents the element represents the accrual, or you may have a cash transaction. Sometimes people get those confused, and we see in filings, mix-ups of those. The other thing that is very useful about this is just identifying those accrual elements. These items typically can be estimates or provisions. So being able to identify those is useful. And then by querying these relationships, you can identify all those elements that are accruals. And then you can also identify the actual base account and the financials that the accrual is impacting. And so this helps, making sure that you kind of got the right element. And then you can also see that in this example here, we've just given an example of amortization of intangible assets. Obviously this is a non-cash item, and it's having and then you can see the relationship indicates what is the instant concept that amortization is impacting on. So in this case, this is the accumulated amortization. So basically it's, if you think of this from an accounting perspective, you can think of I've got my debit, which is the amortization of my intangible assets, and then the credit is what is the instant item it's going to. So this is kind of, and if you look through, we've put a few examples in this proposed taxonomy, but if you look at these, it'll kind of give you the idea of how this works. So, you can think of this as the amortization. Depreciation would be the same thing. That's another accrual, and depreciation would be then impacting the accumulated depreciation instant concept. So it's kind of captures both the type of the accounting relationship that exists between those two concepts and typically how a transaction will be booked. But having that information available in the taxonomy can be extremely useful as a way to understand what those elements actually mean and which instant items have accruals associated with them. So if you want to investigate that, and if someone's not familiar with accounting concepts, we hope that it can also be a useful tool for people to be able to understand the relationships between an instant and the accruals that are going against them. We go to the next slide, please.
Hey, hold on. Before we do that, Campbell, just one quick point on that last on that example. The accumulated amortization has a credit balance, and the amortization expense has a debit balance. I think you got that flipped when you went through the description. I just wanted to make sure.
Okay. Yeah.
Yeah. Okay. All right, next slide then, I'm sorry. Okay, so instant contra. So this relationship, it indicates a relationship between two instant elements. One, the offsetting element is the source element to the target. Both of the elements in this relationship are instant, and they should contra each other. So if the source element has a debit balance, then the target will have a credit balance. If the source element has a credit balance, then the target element will have a debit balance. Next slide, please. And I'll turn it back over to Campbell.
Okay, so so this, once again, is just providing the accounting relationships between two items. So we have the instant and its contra. Now this can be extremely useful, particularly where we found this useful is for things like when if you're normalizing data. It may not always be clear which items are contra items. It may be in the definition of the element, but if you are do you want to go through and make a big list of what they all are? Having these relationships allows you to basically be able just to pull that information straight out of the taxonomy. So an example is, let's say I'm calculating, I want to know what the total assets are for a company, and I go through their financials and I just pull out all this data. I want to make sure, one of the things you may need to do is say, okay, I'm going to take all the debit items and basically total what the assets are. However, if there's contra elements in there, if there's contra elements that offset against those, that actually reduces the value of assets. That doesn't increase the value of liabilities and increase the value of assets. So having this information, it seems kind of basic, but actually having this information available can be extremely useful, and it's extremely useful for a computer system which doesn't know, what a contra is. And having that means that it gives you that information that's available there, and then it can be used. So it may not always be clear as well to a user. What are the two contra assets? What's the contra assets associated with an instant? And having this there just helps you to clarify what those are. This also helps us write rules. We would, if we've got contra debits, for example, we would expect those to be incorporated in the calculation of liabilities. And if we've got contra credits, we would expect those to be involved in the calculation of assets. So having that information there also means that we can query these relationships, and then we can write rules and then check filings against those as well.
And if I could jump one more point though. So on the previous example, that was the amortization expenses rolling up into the accumulated amortization. That's the instant accrual, and then this relationship, the accumulated amortization, is the contra to the gross. So they kind of work in tandem in this case. Okay. Next relationship to cover is instant inflow. And this is another relationship where you have an element, an instant element as the source element and a duration element as the target. And so it indicates that it's an inflow item. The duration is an inflow item to that instant element. And these elements should, in theory, be synchronized to where if the instant element has a debit balance, then the inflow should have a corresponding debit balance. And if the instant element has a credit balance, then it should have the inflow element should have an associated credit balance as well. There are some inconsistencies within the gap taxonomy, so that's not always true, but that is that is one of the benefits of expressing these relationships, is being able to identify any inconsistencies that may exist. Next slide, Campbell. Or I'm sorry, Joe. Go ahead, Campbell.
All right, so this is really, once again, defining the relationships between an instant and the items that can be that will inflow into those accounts. So we've got an example here with cash, for example. And so cash, typically, obviously, we've got a cash flow statement which kind of reflects all the inflows and all the outflows. So it's a very simple example. So basically, any proceeds going into cash is going to use this element, instant inflow, cash being the instant, and any inflow of cash element would be on the inflow side. So proceeds from sale of property, plant, and equipment is that's an inflow into the cash account. And this one seems pretty obvious, but you can do this for a lot of other accounts. Cash is just one account. You could have it for retained earnings. What are all the income is inflows into retained earnings, and any instant account is typically going to have an inflow or an outflow. One of the problems this helps resolve or help clarify, particularly in things like roll forwards, is picking the right element in the roll forward. So in some cases, the roll forward elements are defined, which represent an inflow into an account. However, some of those inflow elements get confused. When people report these values, they kind of see it's an inflow, let's say, into an instant element, and it may be just like the movement, and it's the opposite side of a transaction in the which affects the income statement. So in some cases, we see folks using, or companies using, you've got sometimes two elements are created, one representing the impact on income and the other representing the impact on an instant element. So this helps us to clarify that, so you can see which way these transactions are going. Now, a number of the roll forwards, like if you look at a roll forward for something like ARO for asset retirement obligations, some of the elements in there are basically like the accretion, for example, is really representing the income statement side of it. So you won't see that element going into the ARO instant balance. So it just helps to clarify what the elements actually mean, and if you're doing double entry journal accounting, which account they actually reflect. So this can be very useful. Now, one of the other things I'm going to show an example later, we will use this, is sometimes we want to identify sets of elements. So, for example, where we want to identify all the accumulated of the comprehensive income elements, all the durations that roll into AOCI. So we can use this to identify all of the AOCI income components. And then we have a rule that will then go and check and make sure that none of those elements are being used in the calculation of net income. So being able to have this element, it makes it very easy to be able to query the taxonomy and get a list of, hey, these are all the income items that should be going into AOCI. Let's just go and check, but no one's gone and put it into their retained earnings.
Okay, the next relationship we have is instant outflow, which is the yin to the yang, the opposite side of things. So on the previous one was instant inflow. This is what's outflowing, going out. And so same type of idea. You're going to have the target element will be instant and the source element will be duration. This time though, on as far as the balance attribute, if the instant element has a debit balance, then the outflow element should have a credit balance. And same, if the instant has a credit balance, then the outflow element should have a debit balance. And just as before, there are some inconsistencies in the taxonomy, so that doesn't necessarily always hold true, but that is really the idea behind it. Okay, next slide, Campbell.
Right. So the benefits are pretty much the same as the inflow. This is just the outflow. And we have an example here. You can see obviously cash. This is any cash going out. So you'd see this is the outflow. Now, like in the cash flow statement, most people do an indirect cash flow statement. So we wouldn't expect any of the items in the operating cash flow, for example, being in this instant outflow, unless they're using direct method of accounting. But if you have these relationships defined, it makes checking things like the cash flow statement much easier as well. We can make sure that the correct elements are being used within the financial statements.
Okay, so the next relationship is trait concept, and the trait concept, the trait domain, the class subclass, they all work together as well in concert. And so this first one, trait concept, it indicates a singular trait of an element. For example, the traits operating, financing, or investing, or current or non-current, estimated or accrual, continued, discontinued, so forth, all these attributes. And so the trait is conveyed using a domain item type element, similar to the member elements we have in the taxonomy. And so that relationship conveys a trait of that element, a singular trait. And so if the element's current, that relationship indicates that it's a current element. And so it can be many to one. And this relationship is used with the subclass relationship group, which we'll get into later and have an example on that. But it's all of the subclasses of all the subclass elements that have that trait of the class element will inherit all of those traits. And so hopefully we can, through the examples, you can see how that's illustrated. Next slide, please.
All right, so basically the traits, so you can think of these just like individual properties of a concept. And another way to think about this is if you see some of these elements in the US GAAP taxonomy, or if you look at all of them, a lot of times the attributes of the elements are actually incorporated into the names of the element. So you might see assets current, right? So it's in the name that it's current. And if you looked at the element name, it has the word current in it. And the convention has been, if I've got attributes of a concept, they'll put comma current or comma restricted or comma related party or whatever it is. And all of these things are properties of the element. And typically how you would pick an element is you would look at it, you'd look at the definition, and you'd look at those attributes to try and classify what those things actually mean. However, that's not that's understandable to human mind, but if you wanted to programmatically access all those things that are current, you'd have to read through all the elements, you'd have to parse through the text, you'd have to find out what it is. So what the idea with the trait concept is it just makes those properties of a concept more explicit and makes them searchable in a reliable way. So the intent here is with these updated or ongoing probably updates to the taxonomy, we're going to try and associate a number of the accounting traits with a number of these concepts, and it pretty much correspond to the traits that are basically incorporated in the element names themselves. So as we've said here, you can probably auto-generate a lot of these, but having them there is actually very useful so that you can check them. So let's say you had a concept and you want to go and find the taxonomy, and you know what the traits of a concept are, but you don't know what the concept is. You could then go and search for give me all those items that are current. I want all those items that are assets. I want all those items that are restricted. And then you could search on those traits and it'll give you a cut down list of those things. So then that way, then you can, it's basically narrowed it down to those elements, which will probably be appropriate for element selection.
Okay, so the next one is trait domain. And so this indicates relationship that the target domain element contains the list of options or list for the value of that trait. And so no element that is the target of the trait concept relationship can have more than one trait from the traits domain. So simple example is an element cannot be both current and non-current. And so this relationship is between two domain item type elements, so member elements, and it works with the domain member relationships and the trait concept relationships. So they all are kind of working together in concert. And so next slide, so we can show the example.
Yeah, so this is really a way to restrict the traits that can be, be worked together, as David said, current and non-current. So you can see here we've got some examples. We've got a liquidity and we've got a liquidity domain, which is basically how liquid is something, and it could have a value of, we haven't got them all here, but that liquidity domain has current member on it and non-current member on it. So if you have the current member associated with assets current, what this means is then the XBRL validation can automatically check, hey, if I've got elements which have liquidity traits, they've got to either have current or they've got to have non-current. They can't have both. Now this one's just got two, but you may have you may have traits which have a lot more than that. So for example, if you've got a valuation method, maybe it's historical cost, maybe, and then on that cost valuation, we may have historical cost, we may have fair value, we may have amortized cost. If an element has the cost basis associated with it, then you can only pick one of those. You can't have more than one trait from a trait domain on a single concept. So this just allows, this is really from a taxonomy perspective, it allows us to be able to check that we've modeled the taxonomy correctly, and then that element has only has one trait on it. And if we take an element and try to associate two traits on it, which are from the same trait domain, then we know we've got a problem. This is really a control to make sure that the elements are being defined properly. But as David mentioned, at some point in the future, if, we're not saying this is going to happen, but at some point in the future, if people want to take extensions and they wanted to associate traits with an extension element, so people know exactly what it is, this would also help be able to control that those traits are associated with that extension element correctly.
Well, too far. Keep backing up, please.
Sorry, I was going to click the space bar there. So we do have a couple questions that have come in through chat.
Before we get to the questions, Joe, can you back up? We're still too. One more. Okay, right here. Yep. No, too far.
Too far. Okay.
All right.
So go ahead.
Oh, go ahead if you want to do the question. We can do the question.
Sure. And I was interrupting because Campbell just made a comment here, and this was actually one of the questions that came in from one of our participants. Do you expect preparers to use these relationships for their entity-specific disclosures for their extensions?
Okay, so at the moment, no, there's no expectation that people would do this on their extensions. At the moment, this is primarily to help us with the taxonomy, so that it becomes very, very clear what these elements in the taxonomy mean. And then that helps us with writing business rules, so we can write business rules in a much more effective way. Today, we write a lot of these business rules by creating lists of elements that you can't use in certain circumstances, but it's much more effective just to query the taxonomy to get that. Now, could these relationships be used in extensions? Yes, they absolutely could be, but there's no requirement that would require, at the moment, no requirement to require people to do that.
And this is also a proposed meta model. It's still in beta form. The relationships that have been provided in it are not fully fleshed out. And so before you'd even think about doing that, we would want to have this meta model fully fleshed out and comfortable with where it is.
One quick follow-up on that. Will traits be extensible?
Yeah, so at the moment they are. You could define your own traits if you wanted to. There would be one of the things we're doing at the moment is working these relationships through the XBRL specification set by XBRL International. So yeah, they would be extensible. So for example, let's say you had traits. Let's say there was 3 or 4 traits defined, let's say current, non-current, maybe there was another class, let's say there isn't in this case, but maybe there was, then you could add additional ones as well.
Okay, great. We have one other question, but I'm going to ask you to finish up this section of slides. And if any other participants have questions, please feel free to put them in the Q&A and we'll be monitoring and we'll bring them up. Please continue.
Okay, all right, thanks, Joe. So the last one in kind of this pairing is the class subclass. I know we have one more relationship group after this, but that one doesn't really work with these, but the class subclass does. And so this just indicates in the relationship that the target element has all the same attributes of the source element, but that target element has further qualifiers to it. And so all of the traits of the element are applicable to the target subclass element. And this is more of a fundamental idea in any sort of hierarchical construct, just beyond what we're doing here. But so in programming, any inheritance model, and in this accounting model that we're proposing here is that we have this this class subclass relationship. Next slide.
Yeah, so this basically the benefits for this is it's easy to understand the traits of every element. So it's also easier from a maintenance perspective. If someone's defined for assets current, if they've gone and defined a whole bunch of traits associated with assets current, which is, let's say it's asset trait and current trait, then anything that's a subclass of assets will also inherit those traits, right? So prepaid expense current, we're saying it's a subclass of assets current. That means before knowing anything, I know prepaid expense is an asset and I know that it's current. It's very similar in a way to calculation, but there are subtle differences. Calculations can add things together which have different traits, whereas the class subclass, those traits have to be consistent and they will be consistent. So you can query those reliably. So assets current may be comprised of a contra. A contra element is not a subclass of assets current. And that one of the properties is different. You know, the assets current has a debit, the contra has a credit. So if, no item can be a subclass of another one if any of the properties are different than its parent. So that's kind of the subtle difference there. And the reason this is important is because then you can assign traits to a parent element, and if there's something's a subclass, it's going to get all of the traits of the parent. So this helps for search. And I've got an example in the demo later just showing how this works.
Next slide, please. Okay, so this is the last relationship group that we're going to cover today. It's concept dimensional equivalent. And so this indicates that the source element has a dimensional equivalency that is with another element and a dimension member combination. So the source element will always be a singular element, and the target, there will be 3 target elements that when combined synthetically create the same concept. So you'll have the primary element should have the same data type. There are instances where they don't necessarily have the same balance attribute, and then there will be a dimension and a member element to fill it out and convey the same concept with 2 different ways. And we got the idea to add this to the meta model as we were going through DQC Rule 11, which identifies dimensional equivalencies that thinking that it might be helpful to fully articulate that out within this meta model as well. Next slide. And so, you want to cover the benefits, Campbell, or you want me to?
Oh, no, you can cover this one.
Okay, all right. So the benefits on that is it makes it easy for the users to identify equivalent counting concepts. So so if someone has tagged something with retained earnings unappropriated in their filing, and someone else has tagged it as well, but they're using the shareholders' equity, including portion attributable non-controlling interest, with the equity components axis and that the retained earnings unappropriated member, that you're able to get both values for comparative analysis for that. Also, if in one section of their report, the filer has used the line item, but in another section, they've used that the synthetic combination to report that, those values should correspond to each other. So it would help identify any inconsistencies with that. Okay, next slide, please. Okay, so same as before, to access all of the information on the proposed meta model, the FASB.xbrl.org site, on the What's New section, there is a link which is highlighted in the red box that will take you to the invitation to comment, and the invitation to comment will take you to where you need to go as far as where you can comment and how you can access the taxonomy files. Next slide, please. And so it is posted in our Torque system as well, just like the policy relationships. And so I've done 4 different screenshots here. For each of the different relationships, you got to toggle through the networks in order to jump to them and be able to see them. And we didn't post any sort of appendix Excel file like we did for the policy election, but instead we have made the taxonomy files available at xbrl.fasb.org/meta/dev, which is shown at the bottom of the slide. And next slide, please. And so the comment period on this closes on January 10th of 2023. So we do have some time on this. And like before, if you want to comment, you are free to do so through our Torque system or by sending an email to xbrled@fasb.org. And a couple differences is we are not planning on including this in the 2023 taxonomy. This is being developed, and so we wanted to get input as we're going through this development process, and so that's why we have this invitation to comment out, and part of the reason why we're doing this webinar today. And as I said earlier, the relationships are not fully fleshed out. We still need to go through that and make sure that they are complete. Also, we are interested in knowing if there are additional relationship types that would be beneficial to add to this meta model. And so if anyone has any ideas about that, I'd be happy to hear those. And we haven't decided yet, but we may have an additional invitation to comment or another exposure on this as we go through this process. Particularly if we come up with new relationship types to add to it, it would be helpful to go through a similar exposure process. And now I'll turn it over to Campbell, and he can go through his demonstration.
Right. Thank you, David. So if you go to the next slide, please, Joe. Okay, so warning here, this is still pretty rudimentary, so it's a little bit codey, so I'll give you just a warning on that before we go forward, but I'll try and explain it as best I can. So this is just an example that I had mentioned earlier about OCI. So the latest set of DQC rules, we have a check where we try to look where OCI has been included in net income. So just to give you an example why this is important. So one of the things data users do is they go through and they look at the income statement and they want to standardize that. And we had been going through and basically for all the filings in XBRL in the last couple of years and trying to come up with, like a standardized income statement. And so we basically take everything that companies have reported and then we basically put them into standardized buckets so we can, prepare basic metrics and that kind of stuff. But as we're going through that, one of the things we do is if there's any OCI items in the income statement, we just exclude those, obviously, because they're part of the other comprehensive income. However, in some cases, companies have included OCI items in their calculation of net income loss, which they should not be doing. So, and that probably occurs because people are going through and they're basically looking for an element which kind of closely matches. Maybe some people are using some kind of auto matching routine and they say, oh yeah, this element looks the same. And then they use that, the balance is right, and they put it into the income statement. And as a result, the data, we kind of get, the net income that we expect to be doesn't match to what the net income that the company's reported. So how do we identify what items are AOCI items, right? It's today when we write the rule, we'll go through that, we ideally would be able to look at the AOCI instant balance and see what are all the items that are going into it and what are all the items coming out of it and take all those, take a list of them, and then we know what all the AOCI items are. Today, however, we can't do that. So, and this is kind of what we kind of do to get that list of AOCI items, which is less than ideal and it's certainly not complete, is we will go through and we'll look, and these are statements here. We've got statement one. You can look in the stuff in black. We're basically going through all the calculation networks that are defined in the US GAAP taxonomy, and we look in these groups. In the US GAAP taxonomy, we've got groups for 148, 410, 41, 42, 43, and we go through all those statements. We put, and these are basically all the concepts that are, the durational AOCI items, and we just basically go through all those different groups that the FASB's define, and we basically pull out all the elements in those groups and say, hey, these are all AOCI items. However, AOCI items may be reported, accumulated, the comprehensive income items may be in other places as well, and we're kind of missing them. So this is kind of like a best guess of what they are. So we get a list of all of these AOCI items. The next slide, please, Joe. And then we basically take those items and then we make sure none of them are in the income statement. So how could we get those items? What would be an easier way to get those items? So ideally, we'd like to be able to basically go and look at the AOCI instant account, see what all the inflows are, all the outflows are, and then get a list of those back. So today, can I share my screen, Joe? Okay.
Yeah, please go ahead.
You stop sharing. I'm just going to, and today we have the, so this is the taxonomy. I've got the taxonomy up. This is the proposed taxonomy that we've been referring to. And then you can see here, as David was saying, we have all these different relationship types. So let's look for instant inflow, for example. And then this will bring up those relationships that we've defined. And as we mentioned earlier, this was a cut down list. Hold on, I really want the active groups. So we have these meta model items here, and these are instant inflows. And you can see this is certainly not complete. It's just a little test sample. We have AOCI. These are AOCI instant items, and we've got debt securities available for sale. So there's only one being defined at this point. So if I wanted to get a list of what are all those AOCI items, I should be able to query the taxonomy and be able to get those out. So we wrote a little query to do that. And so we can do this in the DQC rules. So basically, what this query is doing, I'm running a query just to give me the AOCI items. And what this query does is it goes and it's basically saying, go to the US GAAP taxonomy, and it's opening it here. You can see we're trying to open. It's a little bit slow because I've got to go and open the USGAP taxonomy at the moment. So it's loaded this meta model. You can see it here, and then it's just going through, and then it's going to go and find all those items that are instant inflow from the AOCI. Now, and it's come back, and it's got one because that's all we've defined. So it goes back and it pulls all those AOCI items. Now you can imagine if they're all been defined, I can just query, give me all the OCI items which are having effect on AOCI and get that list back. It may not seem that much, but it's actually quite useful because we don't have to go through and define all these lists. It also means every year the taxonomy is updated. We don't have to go back to that list and update the list. We can just query the relationships because the relationships are going to be constant through time. The elements not necessarily going to be. So it's just an efficiency play. It makes it much more efficient. And if you want to, build your own tools, or people want to build their own software, using these relationships is just going to, over the long term, significantly reduce the cost of maintenance. All right. So this is the AOCI item. So if we look at the, I'm just going to stop sharing. If you want to bring the slides up. So you can see here, we get those instant outflow elements and we get the debt securities available for sale. But this would be an entire list of all these elements. And then this can be used for further, whatever you want to do, search, writing rules, etc. Go to the next slide. So the other thing we can do is query the taxonomy for attributes. We talk about these traits. And we have another query that we want to do this. So I think if we wanted to get the restricted property, there is, we've defined a trait in this example taxonomy called restricted member, and this has 6 elements under it. So you can go and look what elements are restricted, and you get a list of 6. But that's not really all of the restricted elements. There's actually quite a few more than that. But in the taxonomy as well, there is a class-subclass relationship. And if you go and look at that class-subclass relationship, you'll see that there is, these 6 elements that are identified with the restricted member. They have elements underneath them that basically share the same properties. So if you basically go and search for all the elements that are restricted, have restricted trait, and then you go and search for the subclass of them, that is then going to give you, it's going to return these 28 concepts. So I'll just share my screen again quickly, and I'll just show you how this works. So just so you can see what this looks like in the taxonomy, you can see here we've got trait concept. We've got restricted. We've got these 6 items here, 1, 2, 3, 4, 5, 6, but obviously there's more than that. If we look at other restricted assets, we can see here we've got class, subclass. So we've also, under other restricted assets, we have all these other items. So all these other items automatically are also going to be restricted. So we have a little query we can run here as well. If I want to get what all the restricted elements are, I can run this query, and what this will do is it goes and it says, hey, go and give me all the items that have a restricted attribute on them, and then give me anything which has got a class, subclass of those. So that means I can just get a total list of, hey, what's everything that's restricted? And I may want to do that for if I'm searching for a concept or whatever. So you can see this has come back. So then this has given me a list of all the restricted concepts, but it also has things like margin deposits, replacement reserve escrow, security deposits. All of these items get pulled back as all the concepts in the taxonomy that are restricted. Now, maybe this is not all of them because I'm just rolling this out, but it gives you a lot more flexibility in being able to basically identify concepts in the taxonomy that you can use in a filing, or that we can validate that filing's done correctly. I'm going to stop sharing if you want to go back to the slide.
Okay, thank you, Campbell. I'm going to ask Michelle to do the last couple CPE questions. We'll do upcoming events, and then what we're going to do is we're going to just answer the last 2 or 3 questions that came in And I want to thank everybody if anybody has to drop off. But what I want to do right now is just show the last couple slides here. So Michelle, if you can come back with the CP questions.
Sure. Thank you, Joe. Okay, so we're going to go to our next set of questions here. And you should be able to see this up on your screen now. Which of the following is one of the proposed meta-model relationships? Is it instant contra, parent-child, or summation item? We just spent another 30 seconds here. Okay, we're going to close the poll down in a couple seconds. Thank you for your answers. All right, and then our last question. When does the comment period end for meta-model relationships? Is it November 4th, 2022, January 10th, 2023, or February 23rd, 2023? Just about another 20 seconds. Okay, I think we're going to close this poll down. Thank you for answering. Okay, I guess we can go to our last slide here, and then I'll turn it back over to you, Joe, for any additional questions that have come up. I just want to let everyone know that we have another session coming up November 15th. This one is on variable annuity and life insurance companies get the skill set for XBRL. Many of you may be aware that variable annuities and life insurance companies now are going to begin tagging their financials in XBRL for the first time. So we're doing a training session on that November 15th, and we hope to see you all there. And feel free to let any clients or colleagues know about that as well. So thank you very much, Joe. I'll turn it back to you.
Great, thank you, Michelle, and thank you for organizing this. Question for Campbell: as you were going through and you were talking about class and subclass, the question came through the Q&A. Is there an overlap between class, subclass, and the wider narrow relationships?
But wide and narrow relationship tries to basically express all of these relationships in a way that we've covered. So the answer to that is yes. But the class subclasses, it's very, very specific in terms of what it means. It means this item is, basically has all the same properties if it's a subclass, whereas wide and narrow incorporates that, but it also incorporates a little bit more than that as well. So the answer is yes.
Okay. One last question. How do you tag assets that are both current and non-current? Is that something you could do using some of these relationship traits here?
Yeah, so it's not like tagging. We're just finding the relationships between elements. But if an element is both current and non-current, you wouldn't put the trait of current on, and you wouldn't put the trait of non-current on. It doesn't have that trait. So by its absence means that it basically is both and none at the same time, if that makes sense. So you're going to have things which don't have a trait, or have both those traits. So if they have both traits that are on one of those domain members, we see conflicts with each other, then in the taxonomy, it's not going to have those traits on it at all.
Okay, fantastic. We do have a couple others. We're going to respond to these in email as we're already a few minutes past the hour. I want to thank all of our participants for joining today and for hanging on as we ran over a couple minutes. Appreciate your support and participation in these events from XBRL US. want to also thank David and Campbell for presenting today. Appreciate all the valuable information that you gave us. If anybody has any afterthoughts from this and you're interested in either providing some commentary or providing some questions that can have response, I'll ask you to email that to XBRL US, and we'll make sure somebody takes a look at that and gets back to you. With that, I'm going to close it up. I don't know if Michelle, if you have any last comments, but on behalf of myself and the other presenters, thank you very much for everybody attending today.
Joe, thanks very much for hosting, and hope to see you all back in a couple of weeks. Thank you all.